Hello and welcome back to the Olymp Trade channel, the place to be if you want to improve your trading game. My name is Alex, and today's video is about reading and trading on simple chart patterns to make smarter trading decisions regardless of your experience level. First of all, what are trading patterns and why are they important? Well, trading patterns are like a secret language of the market. Trading patterns provide a systematic way to approach the market by identifying good trading opportunities and potentially increasing your profit. By learning to read and understand them, you can predict how the price of an asset might move in the next minute or hour. But before we dive into our first pattern, it is vital to understand the ideal time frame for identifying them. It's generally accepted that signals on the longer time frames are more reliable. However, this doesn't mean you have to use the longest time frames. You can explore different time frames to verify your pattern observations. Scalping usually takes between 1 minute and 5 minutes, so it's better to use the 1 minute, 3 minute, or 5 minute time frames. Intraday traders, known as day traders, use time frames between 5 and 60 minutes. However, hourly and daily charts are often used for swing trading. Positional trading is for long-term trades, so it's usually best to look at the daily, weekly, and sometimes monthly charts. Support and resistance level are widely used to identify patterns because they help you spot where price might bounce or break out. In very simple terms, support level is the level where price stops falling, and the resistance level is the level where price stops rising. One key point to remember is that your support level may turn into resistance when price falls below it. There are over 35 patterns depending on who you talk to, but in this video, we'll focus on the main ones: continuation, reversal, and neutral patterns. Continuation patterns are price patterns that usually signal a temporary break or pause in the existing trend, and are likely to be followed by a resumption of the uptrend or downtrend. To trade these patterns, look for the breakout into the prevailing trend and set an appropriate stop loss in the forex mode. Reversal patterns, on the other hand, are the opposite of continuation patterns. A reversal pattern usually reverses the current price trend, causing a new move in the opposite direction and signaling a potential trend in the market's direction. We have the head and shoulders, double bottom, double top, diamond, and Livermore cylinders to break down this pattern. The head and shoulders pattern is a powerful reversal pattern that looks like a hill with a peak in the middle and two smaller peaks on either side, and it signals that the market is about changing direction. To trade it, look for a price breakout at or below the neckline connecting the two smaller peaks and enter the trade. Next, the double bottom and double top patterns are like the letters W and M on a chart. Double bottom is a bullish pattern that signals that price could go up, while a double top suggests that price could go down. To trade these patterns, you will need to wait for price to break through the support and resistance level and then make your move. Alternatively, you can look for a break above the neckline for a double bottom or below the neckline for a double top and then enter the trade. We also have the neutral or triangle pattern. These are typically continuation patterns, likely continuing the current trend. There are 3 types of neutral patterns: ascending, descending, and symmetrical triangles. This pattern usually signals a price move but in an unknown direction. Most traders use this pattern by entering the market based on the market situation. To trade these patterns, you'd want to go long on an upside breakout or short on a downside breakout. Alternatively, you can enter a position when price breaks out of the triangle. Once you've mastered these simple patterns, you'll be ready to confidently tackle the market. Of course, there are many other trading patterns to explore. So the next time you open a trade, look at the price movements to see if you can spot any patterns. With a bit of practice, you'll soon be on your way to becoming a more successful trader. If you found this video helpful, hit the like button and subscribe to our channel for more accessible trading content. Remember, practice makes perfect, so keep learning and refining your trading skills. Until next time, happy trading.